There we go. And pass you straight over to Tom Williams. You ready, Tom?
Yeah, hi everybody. Tom Williams here. We're speaking to you from Worthing, a resort town on the south coast of England, about 40, 50 miles south of London. Give you an idea where we are. It's 5:30, of course, in the afternoon in the UK. And I'm afraid autumn's arrived. There's been gales and lots of rains and flooding up north. So there you are. What can we do? Not much. Now, they can see my chart, Peter, can they?
Yeah.
Good?
Hope so.
Right. Okay, now, this is the daily chart of the future of the S&P 500. Right. Now, I always like to look at this to start with to get some idea of what's going on. Now, we've looked at this in, I think, the last two sessions and also the newsletters, and we identified, right, weakness in the top here. This must have been a distribution area, well, it was. Now, okay, so, right, we have heavy volume came in. Now, admittedly, it came in on that down bar, but if the truth was known, that volume was probably held back and it was on that up bar there. Right. I would say that's probably more like it. That volume or that high activity look, I bet you most of that really was held back from that day there, the previous day. Because that would make sense then. But the supply present, we identified this as it was unfolding. And you'll see that in a weak market, right, you may get what looks like testing. The volume here is not exactly pink. It's not lower than the previous two bars, right? But it does look like a bit of a test look. Okay, so there was a slight response next day, but the volume's too high on that bar. So that's there. That doesn't look good. It's a little bit of extra volume there. The fact is it went up on narrow spread look, and you've got this weakness back here. You've got 3 bars of weakness right behind you now. Right, professional money, fully aware of that. Now here they do a serious looking test, a serious one look. But again, the volume needs to be pink, needs to be clearly less than the previous 2 bars. Right, and that's why there's too much supply in the market. There's too much weakness in the background. Right, that is an upthrust look. That is a true upthrust. What does that say, Pete?
That says upthrust.
They are. Computer agrees. Please read these dialog boxes. They're very good. There's a lot of information in there. And you should always recognize an upthrust. I mean, even experienced people, even one this morning said, oh, that looks like an upthrust. And on the 15-minute chart, I said, it's not an upthrust. Why isn't it? It looks like an upthrust. Yes, it might look like an upthrust, but true upthrusts appear after weakness. Right? Now, if that test was a real serious test, the volume's too high anyway, you wouldn't have an upthrust. You'd have a vigorous up move. This is all weakness here. That's weakness. All these bars are weak. So that is an upthrust. And they do that just before a down move to catch all the stops. Don't forget, there are not hundreds, but thousands of stops above and below these actively traded markets. And they know where the stops are. Right? And it's very, very profitable, believe me, to go and gun for them. Right? So you get another what vaguely looks like a test. and even the volume is a little bit lower. But because the whole market's weak, what I've noticed too is that in a weak market, you may get principles appear which normally in a bull market would be bullish. Like even these tests, you may even see volume low on it. But if there's no response to it, the market's weak. The market's so weak it can't take advantage of the principle like testing and that. Does that make sense? Okay, so down it goes. Right, now, here we have a slight increase in volume, look. And on that is closed top quarter. This red line here was previous highs way over to the left.
So it's not really top quarter then yet, Tom.
Right?
Not really top quarter. Just wondering why you said that.
What, this one?
Yeah.
Oh, sorry, it's not top quarter.
Yeah,
it's the top of the bottom quarter.
Yeah.
Thank you for that. You know, so, but it bounced off that support line, right? We do have a sign of strength appear here, right? This is a daily chart, right? However, there's little or no response at all. This is today's chart, look. Although the volume, I would have suspected, the market has been open 3 hours. So it's obviously got a long way to go yet. So you can't judge that bar until the market closes. But that's the daily picture of the daily chart. But we recognize all this weakness at the top. Look, you've only got to look back at the newsletters and remember what we said on these 5 o'clock dues. And that was clearly all market weakness. Now, of course, you may get, it's Friday today, which is a day you've got to be really careful of because they do all sorts of things to the market if they can get away with it, to mislead you, to get all these rumors that mislead you in the paper and magazines and on television over the weekend. So you might easily get a no demand up move somewhere here, along here, and that would be a serious sign of weakness. Put the 15-minute chart up, Peter, please. Now, I seem to like the 15-minute chart because it's long enough to give them a chance to do something that you could possibly recognize. Right, we've got a sign of weakness here, fair enough. That'd be no demand there.
Yeah.
Right. Exactly. Widespread down. But here, look, you've got some stopping volume. Stopping volume right there. This is a 15-minute chart. So that was about, what, 3 hours ago, was it? Was 2 or 3 or 4?
Yeah, or so.
Something like that. Yes. This is, but they're stopping volume. Now, we know, and it's also on that trend line, look. Now, we know when we see sudden high activity hitting the market like that, after some sort of down move, which has been down, the market's been bearish, and on that high volume, look, it's closed well off a low, look. So we know that smart money must have stepped into the market, right? But we know we need to see that tested on the S&P 500, right? Little sign of strength, right? This red bar is back down into that area. The volume is definitely less, right? But is it low enough? Sideways, sideways. Now, the bar here, look, or these two bars, look, the volume is definitely clearly low, look. Now the computer's colored it pink here and there. Well, here, professional money would see that, right? And a slight increase in volume shows that some of them were buying. But the crucial thing is that it's at the level where you saw the support. We draw a line across here, look. This is roughly where the support came in. And that line, when you see the market fall back down and hit that line, and the volume is low, here it's on 2 bars, look, sorry, there, and that's why it's gone up. Now, there must have been some buying there, right? It's vigorously shot up through this trend line, which is normally a sign of strength, and it's pushing up through this high to the left. Now, what we need to see now is if this is a bullish move, we would expect to see a down bar where the volume is clearly less than the previous 2 bars.
It's got 4 minutes left on the final bar.
Right, well that bar hasn't finished yet, but we'll need to watch this. But that's if this was bullish, you'd see a down move or down bar, a red bar with the volume less than the previous 2. The computer will color it pink to tell you this is so. And that means that where there was this up through here, push up through here, it must have been bullish. This is if it happens. Always say if, not it will happen. If it happens, you'll recognize it. It means the supply has dropped off. But right now it's just showing no demand at the moment. But if we see a down bar somewhere here and the volume's low, then that means it's going up, and this could easily be some form of up move to trap you as the market opened to, well, it's been open some time there, but the market's there, it's devious, it's cunning, it will do opposite to what you have a gut feeling it's going to do. It automatically has to do that because you have to have losers for this thing to work. If everybody's winning, it just you wouldn't get any movements. So you have to have losers, and professional money know that, and they're pretty smart at picking these moves. But we saw the move. We saw it back here, look, stopping volume here. And then it went sideways as they were building up a portfolio of some sort. And then down move in these 2 bars here telling us the supply had in fact dried up. That's why you got these higher prices. It doesn't mean to say you're going to have a huge bull move, but it means you're going to have an up move of some sort. And an up move until some weakness shows. Now, these wide spreads up like this normally can be a sign of strength. But before you say it definitely is, then you expect to see a test. Right now, well, the bar hasn't finished. There's no demand. And that's not good for higher prices. Peter, somebody, client said that the 3 minutes Dow looked very interesting.
Yes.
So Peter's going to get it up for us. Now, gather your questions, please, and we'll do our best to...
I'm just going to move across to the open, because the same client said he followed it from the open as a matter of interest.
Now, this is only a 3 minute, right?
Oh, yeah, look.
So here we go. I'll put less bars. And it's just updated, so you've got 5 minutes now.
Right.
Doing.
Well, that bit you started off with there, you could see they're accumulating.
Right, so the market opened here, but before then, of course, we had that on the top, distributing properly.
Well, that's an upthrust. That means you're going to get, that's an upthrust. even though you've got a shakeout here, look. But the reason that shakeout failed, look at that volume.
Hang on, Tom. I just want to change the time frame. It slips.
Sorry, it slipped.
So,
Time frame.
like on,
It's a 3 minute, is it?
yeah.
But you can read all these different time frames. If one isn't clear, perhaps it's some others are.
Now, similar story, same time.
Yeah.
This is a 5 minutes.
Right. Dow Jones, 5 minutes.
No demand.
Yeah, but here, look, this is what looks like a shakeout, or test, but the volume's too high, look. Far, far too high. And professional money will see that immediately, and bang, up thrust, catch stops, misleads as many as possible, and so on and so on. And then this widespread down here, which Gavin calls gotcha bar, that's not by accident, that's done deliberately, so that people that missed or perhaps went long there or short there or whatever they did, these widespreads down will lock them into a poor position. And that's why it's there. It's there for no other reason. It's not there by accident or news or anything like that. It's done deliberately. They mark it down, and Gavin named it quite well a gotcha bar. Right? So it's all pretty clear, really. Now, we're obviously, it's the first time I ever looked at this chart. But, I mean, even here, look, that's definitely a sign of strength, look. You've got buying power coming in, high volume on red down bars, and then I believe you've even got a signal here.
Test shakeout.
Yeah, test after shakeout. That's Rita in the background.
Keep quiet, Rita.
Oh, Rita does very well trading. Thank you very much. She's very logical, which women are. They're far more cautious and logical than men. Men can't help it. They like the thrill of grabbing their spear and going out there looking for an odd dinosaur or something. They like the excitement, where women say, I'm not having that. But they bring that to the trading floor as well. And we could see that example with Rita here. She's very careful what she trades. And when she does, she makes sure it's an upthrust or a very clear principle that you can see and read. But on saying that, even Peter now is getting very, very good as well. He's seen how well Rita does. And being a husband, he thought, I'm not having my wife doing better than me. So he's rolled his sleeves up and he's really getting good now, which is wonderful, marvelous. Anyway, this is a 3 minute chart, look. 5 minutes. And there's some weakness come in, look. Definitely some weakness here, look. You've got the high volume, look. Right, that is definitely weakness.
Supply coming in.
Supply coming in, dead right.
Supply coming in.
Same one.
What's that one?
Potential buying climax.
Potential buying climax. Well, right. We like to say potential because that's what it is, potential. Most of these things need to be tested or proven. But when markets don't like this high volume on up bars after you've seen an up move of some sort, and you've got some previous signs of weakness here, which has been tested, look, and that's why it's bounced off and went up there. But there's weakness there, look, and this is more weakness. This is it. Supply hit the market. The professionals see that supply as well as you can. You can see that very easily, right? But because the market's so devious, next bar's up. But that's also on high volume, if not a bit lower. But it's closed off, look, almost in the middle, look. There's definitely 2 bars of weakness there. and that's why it's coming off like this. Little bit of lack of selling pressure. They might be doing that so they could sell more, but that's a 5-minute Dow, and right now that looks weak. Now, please, any questions?
Stephen says, would I trade better if I had a sex change then? Well, anything you like, Stephen. Could try. Okay. Mark would like you to look at the 5-minute. This is the 5-minute S&P.
Oh, 5-minute S&P.
5-minute S&P.
Go on then, Peter.
What?
Yeah, it's done. Ready for you.
I thought we'd look at the Dow.
No, this is
It's
you
just
could
very
say
similar.
it's the same, almost.
Well, they are the same because they run a mirror image of each other, don't they? More or less. But this is the S&P 5-minute, and we've just looked at that, and we've seen identified definitely weakness here, look, and that's what's making that market go sideways. Okay, now in a weak market, don't forget we've had a bit of an up move here, right? That makes you vulnerable to some professional group or individuals deciding to take some profits. And then they always have to do that on up bars, look. When you see this ultra high volume like this, after an up move, and we've even got signals to confirm it, and that's why the market's been knocked sideways. But if this is bullish now, right, because they're so crafty and cagey, especially on a Friday, will they have an upthrust? Right? They will if they get away with it. Don't forget it costs them money to mark the market up. But if an opportunity arises, which they can only see, we can't, right, they will mark that up as high as possible, then to collapse on the lows, and that's definitely an upthrust and a severe sign of weakness, which will indicate lower prices. Now, any questions on that 5-minute chart or any of charts?
Okay. With the diamonds green, would you ever short it there? Says David. Tom. So David's asking, even though those diamonds are green, would you short still?
Well, don't forget you can alter those diamonds. I never look at them. I never use them. It's really a clever moving average, and it's just indicating that the market's going up at the moment. But if you go by those, you're going to miss big chunks of the move. You're better off recognizing a principle, right? Specialize on a principle and gradually build up your knowledge there. And that's the best way to learn. But don't go in unless you understand and recognize the principle. But I don't like these so-called moving averages and that. Now, don't forget you can alter them as well. Do you know how to alter them, Rita?
Peter does.
Just go and change the value, that's all.
Yeah.
Now, Peter, yeah, the value, look, well, put 5 or something up.
That's green, green, green. Now, it's more sensitive.
Yeah, it's more sensitive, look. Now what is it?
It went through blank, red, now back to green.
Oh, I see. There's green, 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 green. Right. Now, look. It's white.
Now it's green.
Yeah. But, so that makes it far more sensitive. But I personally don't like using these formulas but it was put in there years and years ago because people were asking for it. They liked it. It does help in a way. It's got a very good, apparently, stop system built into it, which will help you in your trading. But what I personally do, if I see a principle, I'll go in straight away and watch it. Don't take my eyes off it. And then, but your skill as a trader will kick in, has to. Even the fact is that the market's been up, it's been overbought, it's been hitting that top trend line, right? We've seen signs of weakness there. This is a daily chart. It's been lumbering sideways for almost 2 weeks, look. We've had 1 or 2 attempts to test the various, and there's been no response. That's because the market's weak. So keep that in mind. You must trade in harmony with the index. You don't buy or consider buying in a weak market unless you see a gigantic shakeout of some sort, which they will do if they can find a news item to shake out on. It's not the news that moves the market. It's the professional money moving the market around the news. Always keep that in mind. Right? It's just a tool as far as they're concerned, a useful occurrence that they can whip the market. They know that will create money for them.
Can you take the magnet? Okay, Nina's got a question. It looks like a no supply bar after the black 1735 bar. So that is this one, Tom. Nina says that it looks like a no supply bar. What does it tell you? Yeah. So what does that tell you?
Well, what it tells me is it hasn't affected that serious sign of weakness at the top that's got those signals on. I once described it as you're in the Second World War and you're trying to cross a town square. But unfortunately, German snipers, the enemy, sorry about that, Germans, the enemy is up in the tower taking pot shots at anybody that attempts to cross over. That's the tower, that's there. And you would be pushing your luck to attempt to go long when you've got that right behind you. And as Peter just said, he said, yes, it may look like a bit of a test, but the very next bar looks no demand. That's portraying the weakness there. Let me just see if I can get closer to it. That's it. See, that does look like a test, look. Sorry. That does look like a test. And the volume's low. It's got all the makings of a test, but in a weak market, the professionals are fully aware of weak market. So look, there's no demand. Absolutely no demand, look, up on a narrow spread. They don't want to know higher prices. So you're in a weak market. But it's Friday, and they do try to catch you out at times, or they will do their best to catch you out, put it that way.
Rafael comments, but on the opening there was a lot of volume on down bars, then it went up. So right now maybe is it just some profit taking?
Can you see the opening? Well, don't forget, when the S&P pit opens, the trading volume is so much higher, greater than the Globex volume that we watch all overnight, right? So it appears to be really high, and it is high volume. And if you see high volume on these down bars, especially if the bars close in the middle, then somebody was buying in there as well. And they need movement to make money. Markets have to move for these professional people If you're a pro, you've got to have movements to make money. No. I usually look, even at the hour chart's quite good. Now we can certainly see the opening here. There it is. And you right, look, it's a down bar. Okay, the volume came in. Right, it's come up with signals for the same reason I've just told you. Very high volume and down bars. It's closed well off the lows. There must have been some buying in there. Right? But if that was going to be bullish, if that was going to have any substantial move, you'd expect to see a test somewhere along here. If you saw a down bar now, back into this area, look, I'll draw a line here. If there was a down bar anywhere along that line there, and the volume was low, in other words, the computer colored it pink, was less than the previous two bars, relative it's low, then that market's going to go up. Because there was supply here, but they would have absorbed it. If they test that level again and the volume's low, it means they absorbed the supply that you see here with this high volume and even on this bar here. And you expect higher prices. Okay? But Friday, be very wary, because they do their best to get you.
Back to this 15-minute chart, because a question came up from David when you were looking at this, and that blue big up bar there, Tom. Yeah, that's right. Okay, are the retail people getting in on that big up blue bar still holding on the next red down bar, and the smart money might shake them out? Question mark. That was his question.
What I always advise people is don't try to be too clever. Don't try to figure out too much, because you're probably wasting your time. And even if you had direct access to top traders in the pit, they probably wouldn't tell you the truth anyway, if they knew what the truth was. Don't forget, there's a lot of traders there that follow other traders. They call them hound dogs. So in the business there. So don't try to be too clever. All you want to know is the market moves on supply and demand. Demand came in on the low here. Right? Down bar, hit that bottom trend line, increase in volume, look, activity. It went sideways. Then they came back down to that level-ish, right? And on those two bars there was no volume, no activity. So supply that was here must have been absorbed. That's why it's gone up like this. Now it's shot up there, the widespread. It could easily be pushing up through this high here, which they do. But if that's going to be successful, we need to see a red down bar, not like that one. That's not very good. I don't like these with top tails. You'll see a down bar back into this area if it's bullish, and the volume will be low. But if that's market's still weak, which it could very well be, you might see no demand or an upthrust along here somewhere. But don't try to read too much into it. There's no point in reading anything into it. Read the chart. That's all you have to do. Because you'll never find out the truth anyway. They'll lie to you as sure as anything.
Abraham would like you to look at the euro, but you didn't specify a time frame, Abraham. If there's a particular day, we haven't got it here at the moment.
No, there is. It's somewhere up here.
Yeah, currency futures. That's the 4 hour. Should we put the daily up, Pete? Can you put the daily up?
Well, I can try and have them. What's this? 4 hours?
Yeah. Hang on. No, it's not. What's that?
4
Is that
hours.
it? Oh, it's euro. Yes. Okay.
No,
1 hour, he says. 1 hour.
why Peter put 1 hour? Is that 1 hour?
Also looks like it may have accumulation. Looks like downward.
Okay, this is an hourly chart of the euro.
Yes.
Right, first of all, we got this up thrust, which we should recognize. Right, there it is, look, in all its glory. Up thrust, read the dialog boxes. Right, there's a lot of information in there. Okay, now an up thrust, a true up thrust, a true one, appears after you've got weakness. And there must be weakness along here, right, for that up thrust to be genuine. Then they mark it down. If you see any blue bars, that's going to be on no demand, even though there's a green arrow on it. But there's no demand, look. So that's, right, there it is. So you ignore that. Down, down. Now, you do have what looks like stopping volume here. Very similar to the S&P 500. Now, which you do seem to get. You seem to see strength or weakness in the main indexes, and this also seems to affect the currencies. But that's for you to check out and look at it carefully. But look, down bar, after you've seen the down move, right, widespread down, fresh low ground, huge high activity volume, closing well off the low. Look, there was some definitely buying there, definitely. Now, also the next bar down, a test of some sort, look.
Shakeout.
Shakeout, yeah, true. Why not? Okay, so there's two signs of strength there. You could go long on those as soon as you see those. You need to really specialize because currencies will act differently to, say, the Dow Jones or the S&P 500. Currencies tend to get on with it. They don't mess around too much. As soon as the principle appears, off they go. But you will have to discover that for yourself and look at it. But if I was looking at that, I'd say, right, I'm going to go long now, immediately on that. You still may get a principle. You still may get a test along here, especially this high volume here, look. So we draw a line there, look, there it is. If that market dips down and hits that line and the volume's low, then that's a VSA principle of strength, because you can see by the terrific high volume, right, there was supply there. That represents supply, right? Now, if it goes like that and goes back down into that level and the volume is low, it means that the supply that was here had been absorbed, soaked up, bought. That's bullish. So you need to be fully aware of those principles and be sitting there like a poised cat waiting. If it doesn't happen, it doesn't happen. But you can see how clear that upthrust is at the top there. I personally don't follow this this currency too much. In the past, it's proved to be very difficult to follow because it's so liquid, it churns around. But I'm saying that sometimes it is clear, look. And it just so happens that's very, very clear. You could short that. There's no demand there, look. You could short that. And here, stopping volume, you could buy there. And if you see it test along here, there'd be another point you could go in.
Abraham says, what if it goes higher on lower volume? Would that present weakness? Oh.
Okay. Sorry. Abraham's asking on this chart, but what if it goes higher on lower volume? Will that represent true weakness?
No, the markets very often go up on low volume. You might even get a red arrow, right? But what I'm saying is that they want to test that level, right? And they will test it if they can. And therefore, they don't want the market to go up. Therefore, they either knock it back or withdraw their bids or whatever it takes to produce what it looks like no demand. And that allows the market to drift off and then come back down into that level. So you keep that in mind. You know, it's just part of the way they have to trade to move these markets around. But the market unquestionably works on supply and demand. Right? There's supply here, seen by a look at this terrific high volume, right? If it goes up on no demand, they could very well be wanting to test it, and they very likely come back down. If it comes back here and the volume is pink, low, right, then that market's going to go up.
Okay. There's so many questions now. But one quick one. Mark says the 5 minute of the ES is now moving a bit lower. Is there a reason for that?
Oh, we just said there's weakness.
Hang on. Yeah. So, Tom?
What? Yeah.
So is there a reason for that?
Well, the reason is we've just been talking about it. There's weakness everywhere. You know, we saw this. That's there. Right? There'll be no demand here, though. There's a little bit of supply or upthrust or something there, look.
Yeah.
Upthrust, there you are. Read these dialog boxes carefully and relate them to the chart. We don't have any secrets. We don't hold any secrets. There are no secrets. And there are no secrets in the stock market because there's too many clever people out there, backed by money as well. So if you ever hear anybody talking about secrets, you know you're being groomed for a con. And I say that with all sincerity. So read these boxes, understand the market, and there are no secrets. If there is a secret, the secret is that you could read these charts. The chart is a language speaking to you, talking to you. And why is the market coming off? Well, we just told you why it's coming off. Because you've got weakness in the background. Got this, all this failed tests, no demands, little sort of upthrust or something here. That's why it's coming off. But the way the market works, it works in such a way it's there to, in other words, get you if it can. So you've got to tread it's almost like walking through a minefield. You've really got to watch it and don't touch it unless you understand what I'm telling you, for example. You must recognize the principles involved and then you'll become a professional. And then you'll have this knowledge with you for the rest of your life. And believe me, you'll never regret it.
Hi, it's Peter back here again. Earlier we were looking at this chart. This is a 15 minutes of the S&P. And Tom made a comment which was in passing, it sounded like. He didn't make a big thing of it, but I've noticed that he's correct. Whenever you see any kind of tail like that, a top tail, don't be surprised if the market comes off to some extent, not necessarily into a dive down, but it doesn't automatically mean that the prices are definitely going up. Watch out, the price could come off. So it's not necessarily an official Tom Williams VSA principle, but it's something to note that the market went all the way up there and then came all the way down here. So don't expect or don't be surprised if the market does come off a bit, even if it just comes off a little bit. Is that right, Tom?
Well, that's correct, Peter. But see, the thing is, you see, that what time frame is this?
15 minutes.
Right. If you go down to a 2 minute or 5 minute or something, you'll see that top tail is actually no demand. which has given you a warning if you're watching it. And that's why those top tails are usually part of what we call a weak bar. There are weak-looking bars and strong-looking bars, and that's a hallmark of a weak-looking bar at that moment. Okay, so we're still watching this. Please, any questions? We're here. That's why we're here.
Well, at the time, sorry, I want to chip in a bit here. At the time, I was looking at this, waiting, is that going to be a no demand? Because this is a setup that even Gavin talks about, because there's this high volume bar, then it came back and there's low volume back where there was that high volume before. The opposite to the principle that we've been talking about here, with the high volume at the bottom, down bars, and then it comes back down to test on low volume. It's the same idea, just the opposite up here. There's a no demand. But anyway, Carrie says, Tom, earlier you spoke about the likelihood of holding back volume from the previous day on the daily S&P. What is the story on holding back volume?
Well, you tell me. What's the story? Now, Philip Frister is an expert on this because he makes his living from a fund manager. He's an expert in the FTSE 100, and he knows all about this withholding. They're notorious in London for holding volume back. They can do it legally, apparently, as well. But you can't trust these people in these stock markets. But what's good about VSA is that we don't care if there's a few million volume missing or a few million transferred. We don't care too much because we look at relative volume. That's volume relative to the previous volumes, which you can see whether it's high, average, or low. It all means something to us. It doesn't mean anything to most of the people out there. They look at the chart, they say, well, volume, so what? And even the TV people don't know. They definitely don't know. I've heard them. I heard one say, oh, the market shot up on very, very high volume, so that's all buying. And you speak to the logic of it, they say, well, it's got to be buying, that's why it went up. They don't understand professionals will maybe or are selling in that high volume as the market moves up. That's beyond them because they don't know. You know far more about the market than they do. But they do. I mean, why do you think with the commodities, they try and hold the volume back? If you have an end-of-day feed, you don't get the volume till next day.
Quick question. What does it actually mean to hold the volume back? What do you mean?
Well, what it means is that if there's so many million shares, they may cut those millions by half, and that's what they release. And they keep the rest of it under wraps until some later date. But Philip's very good at this. He'll if you ask him, he'll tell you on the ask him a question in the VSA club, and I think there's even a book on it out somewhere. But it doesn't worry us too much because we look at relative volume, and that is difficult to overcome for them, relative volume. So we don't worry too much about that.
Well, it's got a few comments here actually that might be useful for everybody.
A few comments here because Philip's in the room. Hello, Philip. He says eSignal report their volume on the daily charts a day out. They have been asked about it but have not changed it. And he also comments that he uses Paritech end of day futures feed, which reports volume on the correct day. Okay, thank you, Philip. So if you've got any questions, ask Philip on the forum. He's got a slot in the forum on the VSA Club website, and Philip's always looking on there and answering questions. So
Where did you get it from again?
Paritech.
Paratech.
Paritech. End of day.
How do you spell it?
Paritech. Okay, Eddie asked a little while ago, when you were talking about weakness, Tom, if an upthrust does happen, would you go short or do you have to wait for a further no demand?
Well, I personally don't. If I see a true upthrust after a sign of weakness, I'm in there, shorting it. And Rita does as well. Because we know that that's a serious sign of weakness. And you might occasionally get it wrong. But if you're wrong, you just have to close the trade out. But most of them, and I say most of them, will show a serious sign of weakness and you get lower prices. So it's try to not make your trading too complicated. You know, worrying about moving averages and worrying about this and that and all the rest of it. Understand the principles involved, right? And the principles, that's how the markets work. And we see that constantly in front of us. Once you master that, you'll be well away.
John asks, Tom, would you speak about program trading and its effect on VSA principles?
No, it won't make any difference, program trading, because there are far too many traders out there. And I'll be quite honest, the most people out there don't understand what makes the market move anyway. So this program trading sounds all very well, but what are they basing their principles on? What triggers the long positions and the short positions? Until I knew that. But don't forget that the beauty of VSA is because we use no mathematical formulas at all of any sort, right, except perhaps Fibonacci 50%, something like that, right, then that means that if the market conditions change, right, the principles won't change. They can't change. They're here forevermore. But what will happen, the volume and activity will change and the price spreads will change. Doesn't mean to say you're going to lose any signals. It just means that they may appear in different places. But program trading, I know I don't know too much about it, but I know one thing. It won't alter the VSA principles at all.
Okay, right. Alan would like us to look at Apple. We can't get the hourly chart up. We don't have data, but we can put up the daily chart of Apple. Just coming up. Oh, right.
Now,
Okay.
Apple, yeah, that's yesterday's bar.
Right.
It's the end of day.
This is the daily of Apple. John, Alan would like you to comment. That was yesterday. All right.
Yeah.
Well, all we got is a daily chart, and this is yesterday. Right. Well, we've got an upthrust up there, as you can see, indicating lower prices. Professional money had that jump down next day, look, and even widespread down there to lock as many people as possible into this top area. There'd be a lot of potential weak holders locked in here, right? And that's a ploy they use, upthrust, as you know, just for a fall. Then these are gotcha bars to try to lock them in as much as possible. Now we're back down here into this level. Right, there's not a lot of selling pressure on that bar. Sorry, that one, as you can see, look. The spread has narrowed somewhat. It's closed well off the low. Right, very slight increase in volume. Then a sudden turnaround. Right, a mark on the high there. That could be a potential, well, almost like a bottom reversal. But this is a strong stock, remember. What's that say?
Stopping volume.
Yeah, well. So we're informed that the reason that bar went up because of stopping volume on the previous bar. So don't forget, the apple is a stock that's acting as strong, if not stronger than the index. But you need to trade this in harmony with the index. As you can see, we've got this upthrust at the top here. Well, we also had an upthrust, didn't we, in the daily chart of the S&P and the Dow. So you trade in harmony with the index. Right now, right, I wouldn't want to touch that at the moment. But if it came back down to this level, there was fairly high volume there, look. I'll draw a line across there, look. If that market comes back down to that level and the volume is low, the computer calls it pink. Especially if the spread's narrow, then you're going to get higher prices. But this is always a good stock because it readily moves up and down with the index or the parent index. That's why you need to analyze the parent index before you attempt to analyze or trade the stock, the underlying stock there.
David says, could you please explain a true upthrust again?
Right, a true upthrust. Right. Now imagine you're a professional trader, right? Perhaps with a group of others, right? And you have been distributing the last week or so. In other words, you've been selling your holdings on any up move, up wave, together with other professionals. And you're holding the market up by not selling on the downside. You're holding, supporting the market. Now, if you think about it, you think, right, now if I could, there's some news coming out tomorrow, right? And the news, you'd be very naive to think that they didn't know what all the news was going to be. They probably wrote it for them anyway, right? They think, well, we've got potentially good news coming out tomorrow. So what we do, when they announce the news, we'll mark this market up as high as we can, just like an auctioneer bidding up a price to start with to try to get buyers to pay too high a price for it, but we'll mark it up, right? We know where all the stops are. There's 200,000 or 300,000 stops up there. We'll trigger most of them off, right? And then we can probably short some more as well. And then we let the market go. It'll collapse on the low. That is an upthrust, and that's why they do it. Just for those reasons I've just told you. But not always market conditions will allow them to do that. But if conditions do allow it, you see upthrust so often. I mean, look, it's a clear one here in Apple, isn't there? At the top there. So what you do, as soon as you see that, then you know, right, that there's going to be lower prices. And that's why it's there, for no other reason. That makes sense?
Yes. Right, okay. Yes, great, says David. Ron, says he's off to Sydney to Gavin's conference now. Will this be recorded and where? Yes, it's being recorded right now, and should there be no technical difficulties, it should be uploaded onto the VSA Club website this evening, in an hour, or
In theory.
In theory. We always say that because, to cover the possibility of a technical problem. Okay. We've got to finish in a minute, so 2 more questions. First one is from Rafael. I am still having problems with exiting the trades. From your experience, is it better to follow 1 down bar in an uptrend and allowing for 2 up bars in a downtrend, or for example trail a stop under each single reaction?
Well, it's definitely a good idea to have a stop under the last reaction, because if the market went lower than that, then obviously the market's not strong. So it's always a good idea to place your stop below the last reaction, and extra, if you can, put it on odd number, because professionals know the herd, right, as a whole, think in even numbers, and that's what they like to gun for, or that's what they're more likely to gun for. But I'm afraid your skill as a trader has to kick in to decide, how you're going to take your profit. Remember the simple trending system. Once you've got a good position, like you've bought on the low, right, they will support the market, and each bar, when it's being supported, will be blue, right? Means that the close is higher than the close of the previous bar, and you stick with it until you see an obvious principle of weakness, which is usually massive volume and up bar, especially if it's narrow spread, especially if you've got a red arrow suddenly appear. But that'll all come to you. But, most people will get their head around all this and become experts.
Okay, Tom, this is our last question we've got time for today. Crude oil, daily chart, Tom. Carrie would like you to have a look at this and comment. Tom's just perusing the chart.
Well, crude oil, I don't really follow this too much, but at a quick glance, it doesn't look strong, does it at all? I mean, we've got right at the top there, that black bar. There's no signal on this particular chart. Is there, Peter?
No.
But it's up there. It's black because it's gone up. Eh?
It is blue.
Oh, is it?
Navy blue.
But look how the spread's narrowed. But anyway, these wide spreads down like this, and these no demand up bars, look, you always know the market's weak when you see these blue no demand up bars. And where's the stopping volume? All right? May bounce around, but we haven't seen the stopping volume yet.
Well, we should see gasoline come down in price then.
And see the gasoline coming. There's a little bit of buying here. That's what made it go sideways a bit. But to me, that doesn't look... It may bounce up a little bit. But you need to see a proper area of accumulation. In other words, clear, heavy volume on the downside. The market goes sideways, and it will test that level before you get a decent up move. If it doesn't do that, it may still go up, but not nearly where it's so high as you would normally expect it to. Okay. Anyway, I'll say thank you very, very much for listening. And we'll be doing the newsletter tomorrow, I believe. And so it's always worth looking and reading that, and keep studying, keep looking, and you'll gradually get your head around all this, and you will never ever regret it, I can assure you.
Okay, thank you, Tom. Yeah, thanks everybody for coming today, and I hope you have a nice or good weekend. And Rita will say a word.
Will I?
Yeah.
Oh, I'll just
say
say
goodbye.
have a nice weekend. Newsletter will appear tomorrow at the end of the day, and 5:30 next Friday. As every Friday, it will be 5:30 from us. Thank you very much. Have a good weekend. Bye-bye.
Welcome to GoToWebinar, Web Events Made Easy.